Welcome back. The latest data released by AMFI suggests that many investors are bypassing the distributors and are investing into the mutual funds via direct plans. A report by CRISIL suggests that direct plans captured about 15% of the assets under management, mostly on the back of debt-oriented funds. We're joined by Jiju Vidyadharan, Director Funds and Fixed Income Research at CRISIL. Jiju, thanks so much for joining us. Let's look at the broader numbers before getting into the specifics. This is the highest level of inflows into the mutual funds since September 2010. What does it indicate to you?
Yeah, so what we really mean by this is that ever since AMFI has really started reporting quarterly AUM, this is the largest in terms of assets under management that has been reported.
Sure.
Again, if we were to really break the the numbers on the basis of categories, what we can clearly see is that there is a lot of interest in the debt-oriented products. Again, within debt-oriented products, the duration products. So income funds, for instance, what we have seen over the course of the year has really grown by 345%. That is quite a rise. And likewise gilt funds. Gilt funds have also grown by about 119% over the year. What this clearly shows is that there is a lot of interest in the duration products given the interest rate environment. So there is a lot of expectation of RBI cutting rates and investors in duration products really gaining from those rate cuts.
Okay. The other interesting trend which I mentioned is that the maximum inflow seems to be in direct plans, which normally means either corporates or institutions are getting into it.
Right.
Which is also interesting because is there a trend where corporates are parking surplus cash in funds rather than deploying them in investments because investments are down? And does it also indicate the FII investments, because we've seen fair amount of inflows there?
Sure. So if we really look at again the money asset flow between direct and the indirect sort of plan, what we will really see is that this notification really came out only in January. So this is really the first time that AUMs have been disclosed separately under direct plans.
Sure.
What that clearly shows is that institutional investors who are who would be more aware of the difference. So clearly the difference between the two is just the expenses on account of commission or marketing that is charged, which is incremental to the non-direct plans. So the more aware, the investors were more aware, have shifted to direct plans so as to gain from the difference in expense. And that is really this 15%. Again, most of the flow has been in liquid debt-oriented products where
Sure.
institutional investors typically park their money.
The worrying point is that the equity side is not seeing too much of inflow, and the second worrying point is the retail side has not come back. Let's break it up. Equity mutual funds have seen a fall in AUM by 1%. Is it profit booking because the markets have come off from 6,000 or what is the trend in Q3 as compared to Q4?
Sure. So what we have really been seeing within equity is, despite the markets really rebounding and really doing relatively well as compared to the previous year this year, equity as far as participation from retail investors has not really taken off. A lot of the decline, this 1% decline, has largely been flat in terms of incremental participation from investors in equity. A lot of the decline can really be attributed to mark-to-market losses because during the same period the benchmarks actually fell by about 4%. So a lot of it can really be attributed to mark-to-market losses. But in terms of retail participation, it has been slow. Even though markets have really done better.
Okay. What's the new pecking order among AMCs? And the second question is, when in the last 3 years, since 2009 and onwards, have retail investors really come back to the mutual fund industry, or is that continuing to be a concern?
So the first question, which is really the pecking order. So HDFC mutual fund continues to lead at least in terms of assets under management. As far as the latest numbers go, ICICI Pru AMC has really reported the highest increments in AUM over this quarter. In terms of retail participation, which was your second question, ever since the decline really in 2008, the participation has been slow. While there has been participation from HNIs and other institutional investors, participation from retail investors has been slow despite a lot of initiatives being taken by both AMFI and SEBI for investor education.
Right, and that continues to be the big bugbear, right?
Yes.
So most brokerages are not making money because retail participation is very low. And it's really institutional money that is coming through the AUMs into the mutual fund industry. Thank you so much for joining us, Jiju. That's a wrap on Lunch Money. Thank you for joining us. Goodbye.